Does anybody know what the difference? Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And together with Chris Dearborn, our Managing Director on the Markets Intelligence Desk, we bring you the Nasdaq Weekly Market Review. Thank you very much for joining me. It's a very special occasion, March 9th, 2018, the 9-year run of the bull market and Trade Talks' first anniversary.
Let's hope we keep this going for another 9 years,
right? Right, especially selfishly, of course. But you put out an interesting stat this morning in the mid-newsletter. 2,266 trading days since stocks hit their low, the financial crisis of March 9th, 2009. It's been quite a run, Chris.
Unbelievable, right? And what you look at is that there's little respect for this market continually being downplayed. People don't believe it. Investors aren't part of it, but yet we are. Ever since 2008, really 2007-8, when the financial crisis hit and really wiped out the wealth of a number of investors and families across the U.S. and the globe, people were nervously going back into the market a little bit. Nobody really bought back in 100% at that beginning of the market, but really since the last couple of years, the markets have been so steady with good volume on a steady trek up. Companies are making money left and right. It's a different type of investing market where there's still plenty of money on the sideline that could buoy this market up. So it still has legs to go, despite all of the macro rhetoric and hand-wringing coming out of the White House and globally. I mean, the respect for this market, I still don't get it. I'm a firm believer that we're going higher. Even after last February, I was a firm believer of the markets go higher. Sideways is good. We haven't had big enough sell-offs to really give people an opportunity to buy in substantially. There have been plenty of sell-offs intraday, and there have been one-off news items, Brexit, the presidential election, the devaluation of the yuan from China. Those have all been blips on the market. But if you didn't buy that blip or paying attention to the market that day, you missed it.
Right.
So last February, 2018, last couple of weeks, was an opportunity for people to get into the markets for about 3 weeks. That's not a lot.
It's so interesting that you say that this is the most unloved bull rally because the S&P has quadrupled since then. But we haven't had a sustained sell-off since the February 2016 lows.
Correct.
A one-day Brexit sell-off, one-day overnight election sell-off, even what we saw in the beginning of February for a couple of weeks, that wasn't sustainable. And, outside of, was it due to the short vol trade? Was it due to jitters around interest rates? Who knows? The fact of the matter is, macroeconomic data looks fantastic. The jobs number blew consensus away. And 75% of S&P companies beat for the quarter.
What you have here is, a market that has enough behind it to continue to move higher. And that's what we're looking at here. The Nasdaq Composite alone today made another all-time high. I was told a stat today, which is kind of interesting, that when the Nasdaq Composite makes a new high, 80% of the time the S&P 500 will follow within the next couple of weeks. So what you're looking at there is a tailwind on that market alone. And you can look at the stocks that are making that new high. Amazon made another new high today, being driven by other large cap names within the space. So are the mid cap names following? Are the small cap names following? And the answer to that is yes, they are. So what's going to move this needle higher? You had talk earlier this week of tariffs coming out of the White House, and the headlines were grabbed by that, and the pundits on TV were talking about it constantly, and sold the market off a little bit. It actually was enough to end the rally from Monday and Tuesday.
Right.
Since then, you've had excellent non-farm payroll data from the Labor Department. You've had a decrease in week-over-week and year-over-year salary increases. They did increase, but not as much as economists thought. So that gives some headwind to the inflation target, which was the main reason for why this market was stalling. Inflation was creeping back into the U.S. And with that specter of inflation kind of stepping back a little bit, you have more people going back to work, which are more unskilled laborers, non-college grads, and you have 63% of the labor force participation, which is higher than they expected. You have more people come back to work at lower paying jobs, and what that does is bodes well for the GDP and the U.S. as a whole. Remember, 2/3 of the U.S. GDP is on consumer spend, and if you have consumers that are entering the market getting a paycheck in their pocket as opposed to waiting for federal handouts, then that money's going to be spent again. So again, it bodes well for us going forward.
Right.
I truly think that when today alone you had on another network that broadcasts here, Fed governor out of Chicago, Evans, speaking a little, dovishly and saying, I'm okay passing on a rate hike here and wait till mid-year. And even though that there's 100% probability of the Fed rate hike taking place in 2 weeks,
Right.
Are we going to get 3 or 4 rate hikes? The talk 3 weeks ago, when the market sold off, was we were going to get 4. Was that going to go due to debt, credit card debt, mortgage debt, corporate debt? Now we're back to 3 kind of being baked in. So you've got a lot of things there that are jostling, and it's really the story of the day.
Right. Well, what's really interesting next week is we're going to have March 14th, right, which starts March Madness, so it's going to be really interesting to watch trading volumes on the desks decline. But it's also a month to the Valentine's Day massacre that we saw in the market. I believe it was Tuesday, February 14th. We have a whole bunch of inflation numbers coming out, CPI, PPI, retail sales. That's going to be something to watch. And that's when you're going to get that interest rate conversation perhaps again, about a week or two in front of
the 21st,
of the FOMC decision. And I'd also like to mention there's a number of conferences happening as well.
Right.
And you get some interesting tidbits that come out of those when they hit, quietly throughout the day, hit headlines. So you could see trading within individual names around that. For Nasdaq, we're going to be at FIA Boca, which is the futures industry conference. It's very well attended. We'll be broadcasting there all day on Wednesday. Then we also have Quad Witch options expiration on Friday, which will be back on the road at our Philex options trading floor in Philadelphia. So there are a number of catalysts on tap next week.
Absolutely. We look at volume to validate the move, and we've returned to a normalization of volume. This past week, the markets have made all-time highs. We're averaging about 6.6 billion shares in the consolidated tape. In February, we're almost over 10 billion shares because of the volatility, with some days spiking in 11, 12, and with that, you're seeing a lot of jiggering between the markets back and forth. So this Goldilocks economy is really steady economic data, baby steps moving higher, and with that, the market continues to move higher on top of that, and you'll do that on normalized volume, not on higher volume. So we expect to get some higher volume around the Quad Witch, as you would expect, because you had some nice price volatility within the markets, especially with the February moves. And what you're going to have is option expiration, future expiration. And with that, I would expect to see higher volumes at the opening and then at the close of the day as well. But intraday, it could be a little bit lighter, especially with the NCAA basketball tournament being on TV Thursday and Friday.
It'll be interesting to watch volumes significantly go down. Well, thank you very much for joining us, and we will be back. Actually, we're on hiatus for a couple of weeks because of conferences, but we will be back on April 30th together, 2 o'clock, every Friday, 2 o'clock. Jill and Chris with the weekly market review. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.